$5,000 worth of profits. So that's what we are planning. So I said to you before, it's all about planning, decision making, as well as the controlling. So within the planning, we have to set up the costs as well as the budget. So how are we going to set up the costs? So the first thing we're going to do is where we are going to identify the costs as well as this behavior. Because the costs can be separated or can be defined in different ways. It can be either variable costs or fixed costs. I mean, quite a lot of these ways that we are going to classify the costs. Of course, we're going to detail that in the due course. And also within the section A, 10% of the syllabus, is talked about the introduction to the management accounting. As I already said to you, is all about the internal use by the business. For example, one of my friends is started up his business, and I mean, his business is not that successful because he reward his internal staff based upon the external retained earnings within the financial reporting. So this means that, for example, his business has made $10 worth of profit, and the boss number A has owned 70% of shares in that company. The staff will own 30% of shares of the company. So he's going to reward his staff based upon the 30% times the $10 worth of profit. Is going to give them how much? $3, yeah, to those staff. But the staff will not satisfy if the box number A has spent quite a lot of its expenditure during this year. For example, the box number A has spent the expenditure in buying a very, very nice table, but that cost me quite a lot of money. But if we were to use that result to reward our staff using a financial reporting to do that, of course, that's not fair for those staff, because 30% of shares we cannot get control. So that, of course, we will never satisfy about this expensive table. So that what the management account is going to do is to try to adjust this particular situation with making some of the adjustments. For example, we're going to reward you with $3 as we just mentioned, but we're going to plus the expenditures that we've spent, but that is not controlled by yourself. Of course, we're going to reward you with that particular amount. So that's what I mean by management accounting. It's very, very important for the business. So not only for that, but also you need to look at the section D, is where we're going to account for the control systems. What do I mean by here is that we are mainly focusing on the budgeted financial statements. So I don't know about you, but within a company we've got two sets of accounts. So one set of accounts is called the financial accounting, which is for external investors to use, but one of them is called the internal financial statements, which is used by the business. So the internal financial statements, we don't have to prepare for it under the IFRS, for example, but it's based upon our tradition as well as our habits to do that. So how we're going to prepare the budgeted financial statement will be included into section D. Also, within the section E is where we're going to make our decisions. How are we going to make our decisions? For example, we're going to set up the pricing decision, how much we're going to charge our customer, and how we're going to make our decision under the marginal costing system. For example, whether or not we should continue with this project or we should discontinue with this project. Either we should buy this product from the outside or we're going to make it on our own. It's entirely up to the costs as well as the benefit analysis. Of course, those will be detailed in the syllabus. So that's